Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Markets, they did get a big dose of Jay Powell today as the Fed chair was up on Capitol Hill in a day, it should be day one, I should say, of his semi-annual testimony on monetary policy before Congress. He answered many questions, but what everyone seemed to focus on was his messaging around timing when it comes to Fed moves.
With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation.
All right, that, of course, is Fed Chair Jay Powell today before the Senate Banking Committee. Let's get more on what he said and really what matters to investors. Bloomberg International Economics and Policy Correspondent Michael McKee listening to it all, joining us from our D.C. bureau. Mike, it seemed like not really a new message, but he was pretty clear about not having to adjust rates anytime soon.
Absolutely, Carol, not a new message. This is exactly what he said when he met with the press after the last Fed meeting. The Fed has been pretty consistent in saying that the economy is in good shape, and all the adjectives he used, the economy is strong, the labor market is solid, inflation has come down but is still above its target, is stuff that they have said for quite some time now. So this was sort of a message to the market that nothing has really changed. You see market moves because people feel like they have to move, but all that will probably wash out pretty soon. There were a separate group of messages to the folks on Capitol Hill who were much more interested, interestingly enough, in things like bank regulation and what the Fed is going to do about or thinks about some of the president's fiscal policies than anything to do with monetary policy.
And yet, Michael McKee, we did not get a concession from the Fed chair that the U.S. has achieved a soft landing. Republican Senator Kennedy from the state of Louisiana pushing him on that, and he was not ready to concede.
Yeah, I thought that was probably the most interesting exchange of the whole hearing because Senator Kennedy is, as you mentioned, a Republican. And President Trump has been describing the economy as a disaster area, a terrible situation. And here is Senator Kennedy saying that the economy is in great shape and it looks like you made a soft landing. And Jay Powell modestly saying, well, I don't know if I would take credit. And Kennedy saying, no, take credit, take credit. I thought it was very strange. Is
it pretty out of the norm for the senators to congratulate or tell the Fed chair he deserves some credit? I was pretty struck by that exchange like you were. Typically, he goes to these things and he gets a little bit of criticism. In this case, Senator Kennedy was like, hey, you should take some credit for achieving a soft landing, for the U.S. not being in a recession, for the U.S. having the best economy in the world.
Well, it normally depends on whose party is in the White House and who's driving the legislative agenda. The congressmen and senators ask questions sort of based on their own politics. So that's why it was unusual that Senator Kennedy, a Louisiana Republican, would give praise to Jay Powell, especially considering who's in the White House. And the man there has been very critical of the economy.
He didn't talk about tariffs, did he, either?
No, he refused to take any position on anything the president is doing. He was asked several times in an economic way, as an economist. He's not an economist, but as a member of the Fed. And what do your economists say about the impact of the president's policies on the economy? And he said, we don't comment on what the president says or does. That's up to the president. And then asked about things that Congress could do, he said, that's up to you. We don't comment on that. His basic message is sort of, we're staying in our lane, and they're keeping their head down. They don't want to provoke anybody into any more of this talk about the Fed losing its independence.
Is that kind of the mission of whether it's Jay Powell or any Fed chair when they go before Congress and answer questions? Is it just to kind of maintain the status quo as much as they can?
Yes, it's rare that in any of these appearances a Fed chair would give any hint about what might be coming up. The one time I can remember that happened was 2013 when Ben Bernanke suggested that the Fed might in a couple of months or so think about cutting interest rates, which led to the temper tantrum, the taper tantrum. And that was considered to be a huge mistake, even though he thought it was relatively calming words. So they're going to stay away from anything controversial or any real guidance at these things.
Mike, is the Fed overstaffed? I'm asking the question that Representative Andy Kim of New Jersey, or excuse me, Senator Andy Kim of New Jersey.
Are you thinking about Doge, perhaps?
I am thinking about Doge. I mean, that was kind of the undertone of the question, wasn't it?
Well, I'm not qualified to say whether the Fed is overstaffed or not. They have more PhD economists than anybody. I can tell you that. But Jay Powell and others I have talked to behind the scenes at the Fed say because it's an independent agency, Elon Musk has no ability to do anything there, and they won't let him in the door.
All right, before you go, just curious about, in terms of what investors are expecting for rate cuts this year, a cut not fully priced until September, less than 2 cuts priced in for all of 2025. There's so much room between now and then. I mean, Mike, how do you incorporate any of these market expectations, especially when so much can happen between, month to month and from meeting to meeting?
Yeah, I don't think the Fed does, because that's absolutely correct. Anything can happen between meetings. Tomorrow we have a CPI report. If it were to show inflation significantly jumping, and there's a possibility it could because it's a January report, and remember the last couple Januaries we've seen higher than anticipated inflation, then markets might start pricing in the idea of a rate increase. So it's really hard to say that anybody has any visibility on what the Fed is going to be doing over the next 12 months, especially since we don't know what Trump's policies are going to be. And we can certainly be surprised by the data whether or not the president has any influence on it.
All right, Mike, so appreciate it. Mike McKee out there in Washington, Bloomberg International Economics and Policy Correspondent.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Elon Musk leads a group of investors that has offered to buy the nonprofit that controls OpenAI for $97.4 billion, escalating a clash between the Tesla chief executive and the artificial intelligence company that he co-founded. Now, another co-founder who is also happens to be OpenAI CEO, we're talking about Sam Altman, said thanks, no thanks, offered to buy Musk's X social media platform for $9.74 billion. He just moved the decimal point a little bit over on Musk's and the team's offer. So there's a little bit of a tit for tat going back and forth here.
Well, earlier today on the sidelines of the Paris AI Summit, Bloomberg TV caught up with Sam Altman, who weighed in on why Musk may be making the move.
I think he's probably just trying to slow us down. He obviously is a competitor. He's working hard and he's raised a lot of money for XAI, and they're trying to compete with us from a technological perspective, from getting the product into the market. And I wish he would just compete by building a better product.
Well, there you have it. OpenAI CEO and co-founder Sam Altman on the sidelines of the Paris AI Summit, here to help us make sense of this fast-moving story. Back with us, Bloomberg Businessweek columnist Max Chafkin. He's the co-host of the Elon Inc. podcast, which you can find on the Bloomberg and at Bloomberg.com/Elon Inc. Max, also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. He's here in our Bloomberg Businessweek studio. And out there in our San Francisco bureau, Rachel Metz, AI reporter for Bloomberg News. Max, we caught up with you as all of this was breaking late yesterday. Rachel was putting the finishing touch on her own story about this. What more have we learned about this offer? Is it to be taken seriously?
I mean, I think that it is to be taken as an effort to, like Sam Altman says, influence the process that OpenAI is going through, which is a process that Elon Musk has said he opposes, right? He's separately filed this lawsuit saying that OpenAI was unfairly converted into a for-profit company. Meanwhile, Sam Altman now is trying to raise additional funds, trying to expand what it's doing. And Musk, of course, operates a competitor. I do think there probably is a price under which Elon Musk would be interested in owning OpenAI. Now, that would raise all sorts of questions. So it feels like a not totally serious offer, but also not entirely a joke offer either.
So, Rachel, come on in on this. What else have you learned since it broke? And is it a real offer? Has anybody seen the offer or heard from an investment banker about the offer? Like, what do we know?
Yeah, so that's where I'm actually a little bit unclear. I believe Larry Summers, who is one of the OpenAI board members, I haven't spoken to him. I reached out to him, but haven't heard back from him. But I believe he was saying on TV that he hadn't seen an official offer. So if that is the case, then I'm a little bit confused about how official this offer is. It's out. It's out there, but
he has said he has not received any formal communication from Musk on the bid. I mean, if he's a member of the board, you would assume he would, right?
Well, you would, because the statement specifically said that they sent this bid to board members. So if a board member hasn't gotten it, then what does that say? Where's the bid? Show me the bid.
Yeah. So Max, come on back. So if there is no official offer, is this just is Musk playing around, or should we not assume that there isn't an offer yet?
Well, I mean, look, Rachel's kind of hinting at this, but Musk has a track record of sort of speaking too soon, maybe. There was the famous take private offer, which led to a whole battle with the SEC where Musk said he had secured funding. In fact, he had not secured funding by any normal definition. That said, right, because OpenAI is trying to negotiate this for-profit transition, if there is a credible offer, if there is some rich guy, and Elon Musk is a very rich guy, he also has access.
He's the richest guy.
I don't like the question of could Elon Musk come up with $97 billion? That's probably worth asking. He definitely is worth more than that. He'd have to borrow more money. Yeah. He's already borrowed a lot of money against his shares. There are lots of bankers out there, lots of financiers who are, kind of clamoring to do business with him. So it does seem like realistic that he could, if he wanted to, get this money. And if he's making a formal declaration, that seems to me, I'm not a lawyer, but it seems to me like something that the, nonprofit board of OpenAI is going to have to take seriously.
Rachel, what does XAI have that OpenAI doesn't have? Or maybe a better way to ask that is, what does OpenAI have that XAI can't do? Like, how much better is OpenAI than X?
I mean, OpenAI has been working on its technology and lots of different types of technology for years now, as Musk knows, since he was part of the company for a while in the early days. It also has huge mind share, huge attention share. It has a reputation as a somewhat consumer-focused company for an AI company, which a lot of the other AI companies do not have that. They have actual users and actual revenue. There's just a lot of attention focused on this company. X, meanwhile, has done a bunch of work in a reasonably short period of time, but it's not super clear where they are in terms of developing their technology to, say, the next level. Like Grok 3, I think, is the one that people are anticipating right now. It's not out as of yet. The company is in, I would say, a much earlier stage than OpenAI. It has raised a ton of money, though, and that should not be discounted at all. I mean, I think regardless of how real or unreal this effort is to buy OpenAI, it is clear it puts a ton of attention on Elon Musk and his ambitions. And as Max said, at sort of gumming up the works here for OpenAI's transition from a nonprofit to a more straightforward for-profit company.
Is it?
So, I mean, we're here talking about it.
Yeah, day two, actually. Is it important, and let me pose this to you first, Rachel, and then pull in Max on this, but I mean, the interview that our team on the ground did at the AI Summit over in Paris, in France, that Sam Altman said, when asked about Musk and maybe why he's doing this, well, probably his whole life is from a position of insecurity. I feel for the guy. Altman added that he doesn't think Musk is a happy person. It's important that we understand. I mean, do these two guys really, really dislike each other? I mean, is it important to understand the relationship between the two as we try to figure out what's going on here?
I think it's important to understand it, but I also think it's a bit tricky to understand, at least as an outside observer. I mean, we've gotten some hints about it, specifically from some of the emails that OpenAI released last year as part of the court fight between Elon Musk and OpenAI. And it sounds like in the early days they had what seemed like a pretty good relationship, and then things just became acrimonious. But you also see Sam saying publicly things that are still pretty supportive of Elon, or almost sounding like kind of wistful, like he wishes things were better between them. So, I mean, I think the feelings that at least Sam has for Elon seem pretty mixed, and they're not all bad. They're certainly not all bad feelings.
Yeah, well, and also Elon Musk has tried to take control of this company before. We know that from the sort of back and forth between Altman and Musk over this lawsuit that I mentioned earlier, where Musk kind of tried to, as OpenAI was getting bigger, essentially tried a few different things, but trying to either absorb OpenAI into Tesla or to take it over. He has wanted this thing for a long time, and they have been partners for a long time. I think Rachel's right. We don't really know. You know, it definitely feels like they're in something of a feud right now. There have been times, and there was a Wall Street Journal report not long ago saying that they hugged it out, at the end of last year. So like there has been some friendship at times, although at this point, I mean, it looks acrimonious.
Max, I want to ask you this because you're co-host. Oh, sorry. Go ahead, Rachel. Jump in.
Oh, no. I was just agreeing. I mean, it's getting harder and harder to imagine them hugging it out.
It is. Max, I want to ask you this because you're co-host of the Elon Inc. podcast, and he is the story of he's the biggest business story of our generation, is I think how the Elon Inc. podcast puts it. And given that he has SpaceX, he's CEO of Tesla, he has Neuralink, Boring Company, XAI,
Doge.
But it's a story about power. If he were to get control of OpenAI, how much more powerful would that make him?
I mean, that's part of the head scratcher here for me. Part of Elon Musk's argument in this suit has been that OpenAI and Microsoft have been engaged in anti-competitive behavior. It's hard to understand how, a person like you've just described, who also owns another AI startup, how the FTC, maybe a normal FTC, an FTC that is not Donald Trump's FTC, would be okay with that, right? It seems like this would be a huge red flag for antitrust regulators if it really went that far. Of course, like Rachel's saying, I mean, that's getting way ahead of ourselves right now.
Do we know, does Musk still own some of OpenAI? Do we know anything about that?
Well, OpenAI, Rachel should jump in, actually. I think she has a better idea. OpenAI was founded as a non-for-profit, so I don't think he owns any equity.
Yeah, my understanding is that he doesn't. I'd have to go back to some of those emails. I think he might have been offered some of the company, if I remember correctly, but declined it at a point in the past.
I also do wonder about like Microsoft and all of this, right? They've made a big old hunk of investment into OpenAI. I mean, have we heard from them, Rachel, at all in terms of all of this that's going on?
No, I haven't heard a peep from a lot of people on this, and that makes me wonder how seriously other parties are taking this. I know they don't want to ignore it, but I think that maybe they're sort of watching and waiting.
Well, remind us, Rachel, it is quite the delta between this offer and the latest reported valuation at a fundraise for OpenAI.
That is true. What is a little confusing to me is what this offer is for specifically versus what OpenAI and all of its entity is valued at. Because the offer or the statement from the lawyer says OpenAI Inc. and all of its assets. So that would be the nonprofit and what? In my mind, that would include all the things the nonprofit owns a stake in, but it's not 100% clear. And so right. I'm not really sure how you value that versus how you value the nonprofit alone versus, the valuation of the company, which is projected higher.
Just got about 20 seconds, Max. For someone on the Elon Inc. podcast, you guys, the ebbs and flows that are Elon, what are you watching out for next in this story? What do you think might be coming at us, just quickly?
Well, I think we need to see, again, what Microsoft does. And Elon Musk is all over the place in Washington right now. Where does Trump go in response to all of this?
All right, guys, thank you so much. Max Chafkin, columnist at Bloomberg Businessweek, co-host of the Elon Inc. podcast. Here in studio, Rachel Metz, out there in San Francisco. She's AI reporter here at Bloomberg News.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
It is time for another edition of Bloomberg Plugged In, your weekly look at EVs. And the Trump administration is suspending federal funding for electric car chargers, following through on one of President Trump's first directives to roll back U.S. subsidies for plug-in vehicles after he retook the White House. For more, we turn to Andy Bennett, CEO of Driivz. It's a company that provides EV charging management software. It's part of the $5.7 billion market cap publicly held Vontier Corporation. Andy joins us from Raleigh, North Carolina. Andy, welcome back. Good to have you back with us. How does a decision like this from the White House affect your business?
Yeah, listen, we build software that the world's largest charge point operators, the folks that operate networks, use in order to basically bring, reliable charging to their customers. There's no doubt about it. NEVI funding was a really positive thing for the industry. If you're on the cusp where you're thinking about buying an electric car, often one of the anxieties you have is around range. So seeing more chargers is a great thing. The more you see, the more comfortable you're going to be with it. But when you think about NEVI funding and the impact, what it really means for us as an industry, as a charging industry, it's been relatively small. Kind of looking back on 2024 in the United States, there were about 14,000 new chargers added, publicly available chargers that anyone can go use.
Right.
NEVI was responsible for about 120, 130 of those chargers. So we're talking about 0.01% of all the chargers added in the United States last year had anything to do with NEVI.
This is the National Electric Vehicle Infrastructure Formula Program that you're referring to, NEVI.
Yes,
okay.
My apologies. Yes, exactly. And so if you think about it, essentially it was an absolutely positive thing, and I think it had some great benefits. And we still have a lot of projects underway, so there'll be another 1,000 chargers that are going to come to fruition as a result of that funding. But it's certainly not the thing that drives our industry.
How much, though, does an administration and a policy change drive what happens in your industry? And I bring that, we're coming off this interview here on Bloomberg with the U.S. Energy Secretary, Chris Wright. And when he says things like, one, U.S. focused on reducing the cost to produce oil. Coal will be essential in U.S. for decades to come. Says U.S. oil output can grow meaningfully. U.S. seeking to stop closure of coal-fired power plants. Commenting on nuclear. I didn't hear a lot about alternative energy. So I do wonder, how does, again, maybe nothing specifically, but how does that tone and tenor coming from the energy secretary potentially turn into policy or lack thereof in terms of supportive policy for the EV and electrification industry?
Sure. 8% of all new cars sold last year in the United States were electric. Once people drive electric cars, they tend to want them. And just stepping back from that and thinking about it, one way or the other, the endpoint for vehicles in the United States and globally is going to be electric. So the only question is, where is that endpoint? So to answer your question, I think when you have an administration that really is pushing one form of transportation, it absolutely helps. But in the end, it's going to be the consumer that makes that decision. When you look at other countries like Norway and parts of Europe, where over 90% of all new cars are electric, they didn't have federal funding in place to do that. It was around customer choice. It was around broad-based decisions.
But isn't that because a gallon of gas or a liter of gas is like $9?
Certainly the price of fuel has a lot to do with it.
And in a sense, I don't want to say we subsidize fuel because we tax it quite a bit here in the U.S., but we tax it at just a fraction of what some of our European counterparts tax it at.
Yeah, that's fair. You have very high fuel prices. Obviously, in the United States, we've been really lucky with lower fuel prices. For us as a company, my parent company, Vontier, we work with a lot of clients that don't think just electric or just gas. we think about sort of all the above, right? We have companies that focus on classic fueling, on hydrogen, and of course, my company, my focus is around electric. So, ultimately, the administration being more neutral about what that source of fuel is going to be isn't going to have much of an effect on the EV adoption rates. People are going to continue to buy EVs. They're going to continue to grow. Today, there is a massive gap between the amount of cars that are on the road that are electric already and the needed EV infrastructure. So you don't necessarily need the federal government to go help fill that gap. The companies, the charge point operators that make this their life, that make this their living, that are profitable corporations, they're going to continue to put that EV infrastructure out there because it's just plain good business at the end of the day.
And to be fair, we did a deep dive here at Bloomberg into Norway, and, they talked about various policies. There were some incentives. Their value-added taxes were scrapped. Cars were given access to bus lanes. Parking was cheaper. In many cases, free. Drivers weren't charged for using ferries or toll roads. So there was support, to be fair.
I mean, have you visited Norway?
Yeah, but I'm just saying that, there are things.
It's pretty amazing.
That make maybe EV is a more obvious choice for more and more Norwegians. I don't know. Are you hopeful about the outlook here? You know how administrations, whether it's Democratic or Republican, they come in and they've got an agenda and they have policies. We're already, producing a ton of fossil fuels, but it does look like we could have a lot more support from this administration. And you do wonder, when it comes down to choice, people are going to look at the choice of what the cars cost, and they're also going to look at the choice of, if fuel is cheap, you're not going to be so worried.
Yeah, that's fair. I ultimately believe that electrification is going to take place. The experience that drivers have is such a positive experience. This change, or at least maybe, thinking about this as a less subsidized industry, is not such a bad thing. All of us in industry, one of the things we hate the most is big fluctuations between different administrations. Because all those policy changes, what they do ultimately is create uncertainty. So what we want is the unit economics of EVs to get cheaper, right? As that cost of that battery gets cheaper, the cost of the car will be cheaper. It'll be more competitive. As more EV infrastructure charging gets available, it'll become normal for folks.
Yeah.
And those are just sort of natural commercial things that I think will occur.
Andy, do you think Elon Musk being involved in the government and certainly very close, it seems, with President Trump, is that a plus for the EV industry ultimately?
Yeah, Tesla was a huge recipient of course, the NEVI funding for one. But look, the industry has changed. If we had this conversation a year ago, all we would have been talking about was Tesla cars in the United States. Today, it's about 50% of all the sales in the United States. We have a lot of new vehicles out there, a lot of new competition. So look, Elon Musk, clearly, if it weren't for him, there would be no EV industry, right? There's no arguing that. All these cars, all these companies, this entire industry was spurred by the innovation of that company. But I think having him, have the chance and the opportunity to influence the administration ultimately will be really positive for what we're doing. Absolutely.
Are you concerned? We've seen reports out of Germany, other European countries as well, California, just very briefly, about fewer people buying Teslas as a result of perhaps what Elon Musk has been doing in his position in the federal government. Do other EV companies become winners because of that?
Well, like I said, almost 50% of all the EVs sold in the United States this year were not Tesla. So there's clearly a shift taking place.
We're going to leave it there. That's Andy Bennett over at Driivz. He's the CEO of Driivz. It's a company that provides EV charging management software.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes to go until we wrap up the trading day on this Tuesday. You heard Charlie and Bill Maloney working down the trade for you. We've got a bunch of earnings coming up after the closing bell, including Avis, Gilead Sciences, DoorDash, Lyft, Zillow, Energy Transfer, and AIG. So we'll be breaking them down. In the meantime, let's get a read on the markets.
Yeah, I should note, too, we are expecting to hear from the president imminently. He's signing some executive orders, so we'll get some tape playback at a certain point and bring you his comments as we do get them. In the meantime, Greg Halter is standing by. He's director of research at the Carnegie Investment Counsel. They've got about $5 billion in assets under management. Greg joins us from Cleveland. Greg, were you glued to Fed Chair Powell's testimony this morning as we were?
I wouldn't say I was glued. It was up on my Bloomberg, and peripheral basis, I was watching and listening to some of the comments and questions.
Why is that? I mean, is it because you knew he wouldn't say anything that would move markets? Are you looking at what he's saying in a different way right now? Why weren't you glued to it?
Well, I guess from the standpoint of our firm looking for long-term investment ideas, is a meeting-to-meeting basis really going to make that big of a difference? Obviously, if we're on some big long string of rate hikes or rate declines, you're looking for hints, but it seems like we're more in a steady state where there may be no action this year in terms of rates.
Hey, one thing I want to ask you, since we're just coming off an interview with the U.S. Energy Secretary, who talked specifically about the U.S. being focused on reducing the cost to produce oil. Coal will be essential in the United States for decades to come. Talking about oil output growing meaningfully. U.S. seeking to stop the closure of coal-fired power plants. I am curious, in terms of an energy play, is there something that you feel like you can hang your hat on and that you'd be willing to make an investment bet on at this point?
Well, anything in that space that's new is going to take time, obviously. But I would think that nuclear and that whole area has viability. It's something that probably needs to be looked at very closely, which I think the top folks are. And there's certainly some areas around that make sense for the long term. Again, none of this stuff is going to happen overnight.
Yeah. Most
Go ahead,
people would
Carol.
say, I just come off a panel. Sorry, it's just like top of mind. And it was all about power demand and the increase that we're seeing all of a sudden after being kind of pretty steady and not really moving around. There is a jump in demand because of data centers, the electrification, industrialization. Having said that, the nuclear play is said to be maybe about 8 to 10 years away. It doesn't mean people aren't starting to take moves, but it's not a quick process. It's not an investment bet, or do you look at the utilities? We certainly have seen some of the energy companies, some of the utilities pop up in a big way on expectations of AI power demand.
Yeah, certainly that is playing into the calculus here. Some of the companies that could be of interest would be NextEra Energy, American Electric Power up in Wisconsin, and then of course the non-regulateds have had huge moves. But we'd also look at the entities that would be providing the picks and shovels, if you want to look at it that way, into the nuclear side of things. Things like BWXT, which we don't have a position in, but something we're looking at that deals in the whole nuclear space. So I think that may be an interesting way to play, because again, this is going to take a long time. People are certainly interested in looking at areas, but I think you have to pick your spots, because you may see some huge run-ups and then some disappointment with 50, 60, 70% drawdowns in some of these names.
I just want to mention some headlines that are crossing the Bloomberg, and this has to do with President Trump at the White House. Elon Musk seems to be there speaking at a White House event with the president. The president saying he had a great discussion about Gaza. Elon Musk saying it's essential to reduce federal expenses. So some headlines just kind of starting to trickle out. We'll continue to monitor them and bring them to you as they are known.
Hey, in the meantime, speaking of energy, Greg, the Magnificent Seven over the last couple of weeks. 2 weeks ago, Carol and I were sitting here talking about DeepSeek and what happened as a result of the DeepSeek news, kind of like during post-Davos over that weekend. I was surprised to see the hyperscalers and the mega cap tech names continue their commitments to CapEx spending. Are they spending too much money on this stuff?
It's a great question. We thought maybe 2024 was peak at 180 billion or whatever it was of the top 4 companies. This year, we're looking at maybe 300 or more billion. I guess these are all forecasts. As Meta did with the metaverse, there was a lot of spending. The stock did not react very well. And then that spending kind of got pulled back. So I don't think any of these are firm commitments. These companies are out there saying what they want to do. But as we know, these news events, these news announcements from companies like DeepSeek, you just don't know. And that could change things in a hurry. So.
Well, which part do you not know? Do you not know to what extent they were able to be more efficient given what they released? Is that what we don't know?
I think it's a whole range of things. The efficiency side of things is one area, and that certainly affected some of the names like the Eatons and the Vertivs of the world. From the standpoint of looking at other companies, that provide chips and so forth, there's just so much going on that I'm not sure anyone actually really knows what's going on because the news is moving so fast. It's kind of amazing. We know things are moving faster and faster, but this is making heads spin, I think.
Hey, Greg, so are you comfortable, just got about a minute left here, to take a new a new investment position, or is it better to just kind of wait and see and let the dust settle, whether it's, new policy out of the administration and the White House, whether it's, Fed still trying to figure out the way forward? Like, I don't know. Do you kind of sit tight?
Yeah, we're sitting tight, pretty much fully invested in mostly stocks, probably 70-75%. The rest would be fixed income. But we're hanging in there with the tried and true names. If these big numbers for this CapEx continue, we think the Mag 7 have a decent runway in front of them. Saying that, Microsoft's been flat for a year, so it's kind of taken a break here versus some of the other names. So again, you do have to pick your spots, but there's nothing wrong with a Microsoft type name. It's almost one of these must-own companies. Same with Apple.
All right, going to leave it on that note. Hey, Greg, good to get some time with you on this Tuesday. I'm taking a look at shares of Microsoft, by the way. They're down about 2% for the year, so pretty mellow this year. Greg Halter, he's Director of Research at the Carnegie Investment Counsel, joining us from Cleveland, Ohio.
Hey, is Meta Platforms one of your gainers today, Carol?
No, because it wasn't up. Is it up now?
It's up now, 17th day in a row.
When I looked at it earlier, I was going to put it on my list, and I'm like, because it was down.
It's at a record.
It's pretty amazing. Yeah, 17. So the most consecutive gains by any publicly held stock.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.